All right, Matt, the mortgage guy. In today's video, I'm going to give you my predictions for 2023 interest rates. I'm going to tell you why I think mortgage interest rates are coming down in 2023. I'm going to point out a few things with our reads on inflation and why these things are so out of whack, when inflation is going to come down, and when mortgage rates are going to follow that. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker. I help people buy homes, 1 to 4 unit homes, residential homes, investors, home buyers. That's what we do all day, every day across the country. If you want to connect with me and my team, go to greatmortgagebroker.com and fill out the quick form. We'll be in touch. If you want to connect with a real estate agent anywhere across the country, homeandmoney.com/Matt. So inflation reading came out higher than expected. Rates acted as you would expect them to act. They went higher because, the signal to the market is that inflation still isn't under control. The Fed is going to have to continue pushing interest rates higher to quell demand and have the effect that they want to where inflation comes down. The problem with it is that inflation numbers, just like housing numbers, when you look at them year over year, how good of a picture does that truly give you, right? When I tell you that home prices are up year over year from September of 21 to September of 22, what does that really mean? What if there was 6 months of hypergrowth between September and February of this year, 15, 18%, and then it's slowed down and it's actually gone negative? But year over year, September to September, you can point to a positive number. Does that mean that the current housing market is seeing, home price growth? No. But just like with housing, we look at inflation the same. Let me show you an example. Maybe this will help you understand it. For those who looked at this and who follow Barry and follow the markets, knew with absolute certainty in October, when we got the September reading for inflation, it was going to be a miss. It was going to come in high. The markets were going to react. Barry called it. People who follow him knew this was coming, right? And so let me explain. Month over month numbers for inflation, July, August, and September. This is 2021. These numbers were low, right? Tons of inflation. June, 0.8. Then it's 0.3, 0.2, 0.3. So when you're looking at numbers from a year over year perspective, and we look at September versus what was a very low reading last year, it has a much higher chance of coming in hotter than expected. And that's what happened. July, August, September. Last month's reading, oh my gosh, we thought we were, doing something with inflation, and it turns out, we're not having the effect. Let's crank this tightening up, right? Let's jack interest rates up. So long story short on all of this, October, November, December, January, these are last year's Q4 and then January of 2022, much higher readings. Meaning November, when we get our October reading in 2022, you're going to see inflation coming down. It's already written, right? They just haven't told you yet. And then it's going to be, look at what we did. We've done so great. But you've got to realize the tightening that the Fed is doing, the raising of interest rates that the Fed is doing, it doesn't have that quick of an effect on interest rates. And that's where you'd think that all these smart folks would understand. Let me play this video. I think it's really well done. Jeremy Siegel has a really great point about just how funky this whole year over year readings and how they measure inflation and housing both. Doesn't make any sense.
Vindicate the Fed? Does it vindicate the Kashkaris and the Mesters and all those who've said it's not close to a peak? And doesn't it prove you and others wrong?
I don't think so. Let me tell you why. Let's go to the housing sector up 0.7%. That is totally ridiculous. Housing prices by every indicator are going down, not up. Even rentals, yes, they're.
If you missed that, half of core inflation is housing. And it says that housing is up 0.7% because they're looking at it on a year-over-year basis. With demand destruction of higher interest rates, we've got much less demand in housing. Housing is flat or trending slightly down. If we looked at those numbers on something that wasn't a year-over-year, that core inflation would be half of what it is, right? Because it's heavily weighted towards housing, and housing is misrepresented when it says it's up 0.7%. So anyhow, I'll let him continue.
Going up from contracts, they're going up from a year ago. But talk to the people on it. They said, I can't get the jumps that I got earlier this year. That should be minus 0.7%, which, by the way, wipes out core inflation for September. Let me give you a really interesting fact. The distorted way the government does housing statistics. From March of 2020, the beginning of the pandemic, until this summer when the housing market peaked, all the best housing indicators, Case-Shiller, the government indicators, housing was up 40%. What do you think the CPI housing factor was up? 11%, because of the lagged way it put the rising prices in.
Lag is very important. When we're measuring numbers that have lag and we made the mistake in the beginning, right? Oh, there's no inflation. Everything is fine. All the money got pumped into the system. Of course there was inflation. The numbers didn't show it yet, so the Fed didn't do anything. So the Fed took too long to react because of the lag effect. Now they're overreacting because of the lag effect. I'm going to let you listen to one more section because I think it's good. I'll put a link to this video down below. Really good stuff here from Jeremy Siegel.
You'll continue to see that positive. It's imperative that the Fed recognizes that is not an indicator of what the real rate of inflation is. And a second really important point, and I think Ian Shepardson really hit it. When did the Fed start tightening? In March. Mm-hmm. Is that supposed to work in 6 months? Look at the Fed exploded the money supply in 2020, the year of the pandemic, by more than any other year in the last 150 years. Did we have inflation in 2020? No. Did we have inflation in the first half of 2021? No. Then we started in the second half, and the Fed said it was temporary, so it didn't do anything until the March of this year. All right. So monetary policy, we started tightening in March. Are we supposed to see that in the core now? No. What?
Yep. I've listened to this 3 or 4 times, and every time I listen to it, I agree with it more, right? Like, we haven't seen it yet because the numbers we're looking at lag, right? And especially when we look at year over year numbers, it just distorts things. So with all that being said, that chart I showed, and here's my prediction, that we see super high readings for inflation Q4 of 2021 and Q1 of 2022. We don't get our first Q4 reading for inflation until November, because October, the first month of Q4, that inflation reading, I think it's November 12th when we'll get CPI. I would almost guarantee that shows inflation, both the top number and core CPI coming down. Rates always follow inflation. So when that one comes down and the Fed changes their tune or says, hey, maybe instead of a half a point in our next meeting, we'll do a quarter, and then we get 2 straight readings where inflation's coming down, they go, oh, something seems to be working. Our monetary policy and the tightening and the raising of the Fed funds rate seems to be working. And they start to back away from the tightening and the aggressive nature of raising interest rates right now. inflation's coming down, rates are coming down. Whether that's the end of 2022 or Q1 of 2023, we are going to come off of these peaks, which, will probably peak out in the next 30 days, somewhere in the 7.5. We could get to 8. I don't think we're going to get there, but somewhere in the 7.5 to 7.775 range on a 30-year fixed. And then as this stuff comes down, rates always follow inflation. It might not happen super quickly. You might have to wait to the end of Q1 next year, but I would almost guarantee you're going to see interest rates come down as inflation does first half of 2023. I wouldn't be surprised if sometime in 2023 we started seeing rates with a 5 handle. I'd probably be surprised to get under 5, but in the environment we've been in, a 5.5, 5.25, pay a point or two to get in the 4s for a 30-year fixed rate mortgage is going to look pretty sexy. Thanks for watching. Hopefully this is helpful. Let me know what you think down below. Think I'm a complete idiot? I get plenty of those too. If you've got anything else to add on your take on the market, let's talk about it. That's what social networks are built for, right? We can talk online. Be respectful. I don't take offense to it, but to the other people in the comments, that'd be nice. Have a nice day. Thanks for watching. Till next time, we gonna see.